Assalamualaikum, a very good day to everyone. My name is Nur Hafizah Binti Zahid. My metric number is 297815, and today my group and I will be presenting our group project on MFRS 116, Property, Plant and Equipment. Before we start, here are my team members. We work together to analyze the standard and understand how it is applied in real financial reporting. For this presentation, we will go through each section. The first one is summary of MFRS 116. In this section, we give an overview of what the standard is about. The second one is theories behind the development of MFRS 116. We include this part to understand why the standard is being developed the way it is. So we explain three theories. The first one is normative accounting theories. The second one is positive accounting theory, and the third one is regulatory theory. So this theory shows how fairness, real world behavior, and public interest influence the standard setting process. The third one is main parties involved. In this part, we explain who developed and maintain the standard, which is IASB, NASB, and MIA. We add this section to show the role each organization plays in ensuring the standard is updated, applied correctly, and understood by the users. Fourth one is limitation of MFRS 116. Even though the standard is useful, it has weaknesses. So we discuss like estimation uncertainty, revaluation volatility, high compliance cost, and subjectivity impairment. Last but not least is suggestion and recommendation. This is the part where we propose practical improvement such as using expert input, setting consistent revaluation policies, simplifying compliance for SMEs, and improving impairment. I'll proceed with the main content for our project. So what is MFRS 116? MFRS 116 is a accounting standard that guides how companies should recognize, measure, depreciate, and disclose their property, plant, and equipment. It is based on IAS 16, which is international standard. This alignment ensures consistency across different countries, making financial statements easier to compare. In simple terms, MFRS ensures that users of financial statements get meaningful information about a company's long-term asset and how their value changes over time. Next, we go to objective of MFRS 116. The main objective is to ensure PPE is recorded accurately and fairly. An asset can be recognized when, first, it is probable for future economic benefits and will flow to the entity. The second one is the cost of the asset can be measured reliably. So this prevents companies from recording assets that do not actually contribute to the operation. The standard also requires to have a suitable measurement, depreciation over the useful life, and proper disclosures to present a true and fair view of financial position. How about scope of MFRS 116? The standard applies to most tangible assets used for production or daily operation, such as land, buildings, machinery, vehicles, office equipment. However, it does not apply to everything. For example, asset held for sale under MFRS 1 and MFRS 5, and biological asset fall under MFRS 141. MFRS 116 has three main components. The first one is recognition. So what is recognition? Recognition is an item is recognized as a PPE only if it provides future benefit and its costs can be measured. The second one is measurement. Assets are initially measured at cost, and later companies can choose between the cost model or the revaluation model. So the asset must be depreciated based on how long it will be used. The third one is disclosure. Company must disclose clearly about measurement method, depreciation method, useful life, and revaluation details. This will help financial statement users understand how the company's manage its long-term assets. Why we choose MFRS 116? So we choose this standard because BPE makes up a large portion of companies' assets. This means that any mistake in recognition, measurement, and depreciation can affect the entire financial statement. MFRS 116 also help us to understand how companies manage their long-term asset in a transparent and accurate way. Since it is aligned with international standard, it's ensure that Malaysian businesses follow global best
Assalamualaikum and
practices.
greetings. Now I'm going to talk about the three key theories that contribute to the formulation of MFRS 116 or normative accounting theories, positive accounting theories, and regulatory theory. Each of these theories provide a different viewpoint on why certain requirements exist and why specific options are allowed within the standard. The first theory, normative accounting theory, focuses on what companies should do from an ideal and logical perspective. This theory emphasizes fairness, reliability, and usefulness of information to financial statement users. Normative thinking played an important role in forming the core principle of MFRS 116, especially in the areas of recognition, measurement, and depreciation. Under this theory, an item is recognized as an asset only when it is expected to bring future economic benefits and its costs can be measured reliably. This approach reflects a logical and fair way of presenting information. The theory also supports the availability of both the cost model and the revaluation model because each provide users with valuable and relevant information depending on the situation. A clear example of normative influence is the decision to prohibit revenue-based depreciation. This method was rejected not because it was unpopular, but because it did not logically reflect how an asset is used. Instead, depreciation must relate to the consumption of the economic benefits, showing how ideal practice guided the standard. The second theory influencing MFRS 116 is positive accounting theory, which explains what companies actually do in restoration. This theory assumes managers act in their own interests, such as trying to maximize bonus, avoid breaking debts, or maintain stable earnings. Because of this behavior, the standard includes flexibility, especially in allowing companies to choose between the cost model and revaluation model. Companies with incentive to show higher net worth may prefer the revaluation model, while those seeking stability might choose the cost model. Positive theory also helps explain why companies lobby during the standard setting process, as they want rules that benefit them. In addition, Malaysia's decision to converge with IFRS was not only based on ideal comparability but also practical motivations such as attracting foreign investment and improving international business relationships. These real-world factors reflect the ideas behind positive accounting theories. The final major influence is regulatory theories, which focus on why rules are created and how regulators behave. There are two important branches of this theory. The first, public interest theory, suggests that standards exist to protect the public by improving transparency and preventing fraud. This is reflected in the role of the Malaysian Accounting Standard Boards (MASB), which is develops standards like MFRS 116 through consultation and expert input for the benefit of society. However, the second branch, regulatory capture theory, argues that regulators may sometimes be influenced by powerful companies or industry. This can affect the timing of implementation or the level of flexibility allowed in this rule. The ability to choose between measurement models in MFRS 116 can be seen as a result of balancing public interest with industry pressures. Through consultation, MASB needs to satisfy the public while also considering the concern of preparers and auditors.
Hi everyone, I will be explaining the main institutions involved in the development and implementation of MFRS 116. There are three key bodies. At the international level, we have the IASB, which issues IAS 16, the standard that MFRS 116 is based on. In Malaysia, the MASB adopts and issues the standard as MFRS 116. Finally, the MIA helps accountants and auditors apply the standard correctly in practice. So in this section, I will explain the roles of each body and how they contribute to the quality of financial reporting under MFRS 116. Institution is the IASB, which develops IAS 16 through a structured due process. This includes research, issuing an exposure draft, collecting comment letters, and then finalizing the standard. IASB also works with global audit firms, companies, and academics to keep the standard practical and also relevant. One clear example that I can say is that 2014 Amendment on Bearer Plants IASB issued Exposure Draft ED 2013/8, gathered worldwide feedback and then updated IAS 16. Since MFRS 116 follows IAS 16 closely, IASB decisions directly influence how Malaysia applies the standard. MASB, which adopts IAS 16 and issues it in Malaysia as MFRS 116. MASB ensures the standard as Malaysia's law and business environment. Before adopting changes, MASB runs public consultations and reviews comment letters to assess the impact on local companies. They also coordinate with regulators like Bank Negara Malaysia and the Security Commissions for consistent application. For an example, when IASB issued PPE amendments in 2017, MASB held its own consultations even before finalizing the Malaysian version. Finally, MIA supports practitioners in applying MFRS 116. They provide training, workshops, and technical guidance on areas like revaluation, impairment, and componentization. MIA also gathers feedback from accountants and highlights recurring issues to MASB. A good example is that at 2019 Technical Alert, where MIA clarified questions on revaluation frequency under MFRS 116. This helps ensure the standard is applied correctly in practice. Thank you.
Assalamualaikum and greetings. Now, let us move on to the nature of MFRS 116. First and foremost, let us head back to the past on how Malaysia has come to establish the principles-based accounting standards. Malaysia's accounting standards are largely influenced by the United Kingdom and the International Accounting Standards Board, both of which promote principles-based reporting. The adoption of International Financial Reporting Standards, or IFRS, led to the development of the Malaysian Financial Reporting Standards, marking Malaysia's shift toward more flexible and judgment-driven standards. Now, how did the small and medium-sized enterprises in Malaysia react to the adoption of MFRS? Well, prior to MFRS, SMEs followed the rule-based MASB framework, which was rigid but simple. After MFRS was introduced, many SMEs faced difficulties due to the standard's complexity, the lack of skilled accountants, and the cost of hiring external professionals. Not only that, but also frequent amendments, which causes confusion and costly technical skills for the owners. In addition, for those operating only in domestic markets and not interested in international trades, the additional reporting requirements brought more burdens between principles-based and rule-based standards lies in their application. Principles-based standards depend on professional judgment to apply broad principles. Its main focus is on the economic substance of a transaction. On the contrary, rule-based standards prescribe detailed steps, which offers transparency and consistency. The characteristics of the principles-based approach is to ensure that financial reports provide a faithful representation of a company's economic reality, while remaining responsive to users' needs. Moreover, it offers a clear and well-defined conceptual framework and scope, which is interpreted in a simple and clear language for end users to make effective decision-making. The flexibility of the standard is seen through the freedom of entities to choose between two measurement models, the cost model and the revaluation model. Under the cost model, assets are carried under historical cost, less depreciation and impairment. This method is simple, objective, and avoids costly appraisals. For instance, WCE Holdings Berhad and IOI Corporation Berhad uses this model. Meanwhile, the revaluation model measures assets at fair value, providing a more realistic view of the company's worth, especially when assets values have increased, as seen in Muda Holdings Berhad and Comfort Gloves Berhad. MFRS 116 also allows management to choose suitable depreciation methods based on how the assets generate economic benefits. Some of the most commonly used is the straight line method, where it evenly spreads the cost of an asset over its useful life. Another method is the diminishing balance method. It results in higher depreciation charges in early years and lower charges in later years, reflecting that assets lose value more rapidly when they are newer. Another used method is the sum of the years digit method. It is best suited for assets that depreciates early in their useful life. This flexibility highlights professional judgment and ensures financial statements remain both reliable and relevant. To summarize, MFRS 116 clearly reflects Malaysia's principles-based standards through its flexibility in measurement and depreciation methods. It balances comparability with relevance and allows companies to represent the true economic substance of their assets. Thank you. I will now pass it on to Zairin.
Assalamualaikum warahmatullahi wabarakatuh. My name is Zairi Iskandar bin Zarizal and my metric number is 300468. And right now, I'm going to share with you about the limitations and suggestions on MFRS 116 PPE. So, the first limitation that I want to lecture is measurement uncertainty in determining useful life and residual value. We know that MFRS 116 requires the management to estimate useful life and residual value of assets, which is not something objective. The uncertainty will affect the accuracy of the value given by management. For example, a manufacturing company purchases machinery for RM2 million and estimates a useful life of 10 years with zero residual value. After a few years, due to new technology emerging, reducing the machinery's economic usefulness to 6 years only. This will cause previous depreciation amounts to be understated and financial statement may not reflect the true and fair value of asset consumption. So what are the solution or suggestion that can be given? The suggestion is the company need to strengthen the estimation process for useful life and residual value. Company can reduce measurement uncertainty by reviewing historical data and industry benchmark. It is really recommended to also consult the technical expert, for example, engineer, as they really know the real thing about the performance of assets. For example, company can use past data of previous machine to refine depreciation estimates for new equipment. This will increase the fairness of estimation. The next limitation is high cost of compliance for valuation of SMEs. Implementing MFRS 116 may require independent valuers, technical experts, and regular assets inspection to ensure the accuracy of information. Smaller companies with limited resources may find it financially burdened. This decreases the cost-benefit relevance of the standard for SMEs. For example, a small workshop with limited assets would still need to document acquisition costs, assess impairment, and justify depreciation methods. So, the suggestion that can be implemented to this limitation is simplify compliance for SMEs and encourage proportional disclosure. One of the simplest suggestions for SMEs to reduce cost of compliance is by implementing cost model instead of revaluation model. The main reason is cost model doesn't require frequent valuation which consume money and quite complex. So SMEs must also send their accountants to training program to further their understanding of PPE, and this can significantly reduce costs because business doesn't need to pay money for external consultants. And the last limitation and the suggestion I want to share today is fair model introduces volatility and inconsistency. We know that companies can either choose cost model or fair value or revaluation model in determining the value of assets. So let's say the company use revaluation model. They have to take information or data about the assets fair value from the current market or by using professional judgment. This is where the inconsistency emerge. For example, a company that owns land in city area that recently developing rapidly due to coming of many investors, then after a few years, the city starts declining in purchase power due to some reasons. This will make the performance analysis more difficult and inconsistent. So the suggestion is establish clear and consistent revaluation policies. The revaluation policy is about how often and by whom revaluations are performed. For example, a real estate company can make policy on revaluing their assets for every 3 years, for example, using data from current market. It is also important for company to disclose the assumptions used in their valuation to avoid any misunderstanding and maintain transparency. So,
In conclusion, MFRS 116 strengthens transparency in asset reporting. So it helps to ensure companies present PPE accurately through proper recognition, measurement and depreciation. Besides, it helps to align Malaysia with international standards. It helps to promote consistency and comparability across organizations globally and improve stakeholder confidence. MFRS 116 also provides flexibility through principle-based guidance by allowing professional judgment in choosing measurement and depreciation methods, and also helping firms reflect true economic reality. And lastly, theory support both ideal and practical accounting practices. Normative, positive, and regulatory theories explain why the standard balances fairness, real-world behavior, and public interest.